On Halftime Report, I'm Mangla Malu. With me are Ekta Batra as well as Sonal Bhutra. It's looking like a much better screen today than what we saw last week. The bulls are trying to reclaim some control. In fact, as we speak, the Nifty is closing in on that 18,000 mark as well, a mark which it broke last week after holding on to it, for a good part from the 10th of November to mid-December as well. Just a few breaths away from that 18,000 mark on the Nifty. It has been much better as far as the market health is concerned as well in terms of broader markets. The Nifty mid-cap index, after falling almost 1,200 points on Friday, is now up almost 760 odd points. And we have 7 stocks advancing for every stock that has declined in today's trading session. So the advanced decline lines doing well too. So the first half belongs to the bulls. The big question, however, is what happens in the second half, and importantly the remainder of this week, because we do have the December series expiry. And at the same time, the markets, when they fell on Friday, a lot of people believed they were oversold. So if that's normalized, are we looking at further hurdles going ahead or not is the big question. Hi.
Hi, Manglam. Hi, Sonal. Yes, absolutely. No doubt that we are seeing a good amount of gains in today's trading session. In fact, we have the mid-cap index, like Manglam pointed out, which is managing to gain some amount of ground. Remember, on Friday's trading session, we had turned into the red on a year-to-date basis for the mid-cap index. So maybe that Santa Claus rally has come a little late, but nonetheless, it could possibly be the year-end rally that we're seeing at this point in time. Whether or not it sustains, whether or not the volumes are possibly going to be above or in line with average, considering that it is year-end, is something that we will need to track over the next couple of days. Hi, Sonal.
Hey, Ekta. Hey, Manglam. Yes, absolutely. That is something that we'll be tracking. And as far as the mid-cap index is concerned, if we look at the broader markets, across pockets, we are seeing big gainers. PSU banking name, definitely that's the big mover in today's trading session. So that index is up around 3.5%. You have something like a Union Bank. There is City Union Bank, RBL Bank. So for the financial space is really in focus, apart from the mid-cap space that we've been talking about. Some triggers in terms of the monthly expiry this week, so that we'll track. But as I said, broader market movers, they are up and running here. So we have Restaurants Brands Asia, that is buzzing in trade today. Manglam, what's happening here?
Well, the thing that's happening here is that they have bagged the agreement to go ahead and launch Popeyes, which is a popular chicken sandwich brand in Indonesia. The original, Popeyes held by Restaurant Brands International is one of the fastest growing franchises in the US, and that is something that everyone's looking at in India as well. Looking at the growth prospects for chicken sandwich, Jubilant FoodWorks acquired the franchise rights for the same in India, but Restaurant Brands, which runs Burger King in India and in Indonesia, will now open Popeyes in Indonesia. That is something that the street's liking. But apart from that, the bigger trigger is that towards the year end, a lot of people look at all these counters because of QSR ordering in, etc., and the kind of drubbing that we saw in all these QSR companies over the last trading sessions. So a large part of this up move could also be, a rebound from the lows that we saw last week. So Jubilant FoodWorks is up around 1.5%. Zomato itself is up around 8%. Indian Hotels is coming back in trade as well. So you have a tailwind for the sector and a positive development. All these things are taking Restaurant Brands International higher today.
All right.
India, Restaurant Brands Asia.
Asia. So that is about Restaurants Brand Asia. But we also have Suven in focus today. Private equity investor Advent is set to acquire control of Suven Pharma from the selling promoters, who see this as a succession move. Ekta, tell us more about this and what's happening here.
Well, yes, the deal activity, I would have to say, within the pharmaceutical and healthcare space has been very active in 2022, and we're ending the year with another transaction as well. So just the news, Advent, which is a PE firm, has entered into a share purchase agreement. They are going to be acquiring 12.75 crore shares, or 50.1% stake of Suven promoters. This will be for 495 rupees per share, which turns out to be 6,300 crores in terms of size. Mode of payment is cash. Jasti Property, which is the promoter group, will hold 9.9% stake in the company. Thereafter, and Advent International is going to launch an open offer to acquire an additional 26% stake at 495 rupees. And if in case it is successful entirely, it will go to 76% in terms of stake. The company does not, however, have any plans of delisting Suven Pharma. They are in fact looking to merge Cohance, which is in fact one of the companies that they have, which is in a similar space, CDMO as well as API, which Suven is in, together and that would probably be one of the key factors to look forward to in terms of growth. Reason for the stake sale: unable to bring a proper succession plan in place. Venkat Justi's role post the deal, he's likely to stay on for a period of time. Suven Life, there is no plans to fund Suven Life from this deal. In fact, Suven Life has been quite well funded. 400 crores is what they had raised from a rights issue recently. Post the acquisition, like I mentioned, they intend to explore the merger of one of their portfolio companies, Cohance Life with Suven. Aim will be to build a leading end-to-end CDMO as well as merchant API player. The street is focusing on what the blended margins could be, will be probably around 30% going forward. Continued growth rate on a blended basis. Remember, Suven has recorded around 20% CAGR growth in the past couple of years and has been really lauded for its margins, which have been above 40%. So those are a couple of factors to watch out for in what is an important transaction.
All right, that is an important transaction indeed. As we speak, though, we have seen some big moves in a couple of these names. So the frontline space, we have Bajaj Finance, which has moved to the high point of trade. Eicher Motors, after underperforming in the earlier part of the month, has come back to the party in the last week of this calendar year. Eicher Motors too has moved to the high point of trade. And some up moves coming in on Grasim as well. Grasim too has moved to the high point of trade with a gain of about 1.5%. But importantly, it is a much bigger recovery that we're seeing from the lows of today's trading session. Let's take a short break, come back, we focus on the markets and individual stocks.
Into halftime report here on CNBC TV18, and it's been a largely disappointing year for Indian pharma companies when it came to inspections by the US drug regulator. This year, in fact, we saw large companies such as Sun Pharma and Glenmark being issued import alerts, one of the severest forms of US FDA actions on a facility. Ekta is here with more details on this one. Ekta?
Well, let's start with Glenmark. The company, which has been known for having a good track record with the US drug regulator, was issued a warning letter in 2019 for their Badi facility in Himachal Pradesh. The issues at the facility, which manufactures creams and ointments, it seems remained unresolved as the plant was slapped with an import alert 4 months after it was re-inspected by the US drug regulator in June this year. Another case was Sun Pharma's Halol facility in Gujarat. The facility, which has the ability to manufacture complex drugs and injectables, was already in a precarious situation with the US drug regulator. Based on an inspection in December 2019, the plant was issued an official action indicated status in March 2020, implying that the US FDA can put all new approvals on hold if correction actions are not completed. They were re-inspected earlier this year, only for the US drug regulator to maintain the OAI status on the plant and eventually issue an import alert at the end of this year. The US drug regulator has in the past brought up issues such as Glenmark's inability to investigate complaints of drugs manufactured in their Badi plant to inadequate processes at Sun Pharma's Halol facility. Experts say the drug regulator's requirement for compliance can be described as a moving target, with Indian companies needing to constantly adapt, which might have lagged with the COVID-19 hiatus. For Sun Pharma, the consolidated sales impacted from Halol for the entire company is less than 3%, and for Glenmark, Badi was around 1 to 2% of FY22 total revenues for the company. However, lower contribution from the facility notwithstanding, the street fears implications of the import alert, such as timelines to resolve import alerts can be uncertain, sometimes going into years. Approvals can in the meanwhile slow down from the US, and remediation and transfer costs can impact margins. Lastly, the street also fears system-wide compliance issues. For example, for Glenmark this year, they were also issued a warning letter for their facility in Goa and their facility in North Carolina. Had an OAI status. Similarly, Sun Pharma's Mohali plant, which they inherited from Ranbaxy, was issued an OAI status in November this year.
Ekta, thanks a lot for that. So that's about the tough 2022 that it was for all the pharmaceutical companies. We will monitor all the situations with regards to the US regulator in 2023 as well. But it is a party in the markets, no doubts about that, because we have 18,000 on the Nifty and the broader markets are doing extremely well. Yes Bank is up around 11.5%, and it is generally for all the financials itself. And talking about financials, Equitas board has resolved to renew P.N. Vasudevan's term as MD and CEO for 3 years. This term is, of course, term renewal is subject to the approval by the Reserve Bank and shareholders. Abhishek gets us more details on this. Abhishek, if this does get the approval, should be a largely positive thing because status quo?
Well, it's a relief for the bank as they don't have to find another successor, as Mr. P.N. Vasudevan has decided to stay back as the MD and CEO of the bank. So he was earlier planning for a philanthropy move post the retirement that he had planned earlier for July 2023. So he had expressed desire to move on from the bank after identifying a succession to the position that he would be leaving. However, the board has resolved to renew his term for a further period of 3 years from July of 2023 to about July of 2026. This is subject to approval by RBI as well as the shareholders. Back to you.
Okay, all right, Abhishek, thanks for that. In fact, credit card spends in the month of November declined by 12.6%. The issuance came down to 1.63% in November from 2.14% in October 2022. Give us more details here.
Well, there has been a massive decline in credit card spends that you are witnessing for the month of November. So credit card issuance, however, has remained healthy at about 1.6% month-on-month growth that you are seeing in November versus 2.14% month-on-month growth seen in October. The spends have declined massively by about 11.2% month-on-month, which is the highest decline rate that you are seeing in last 12 months or even more. So average ticket size is the lowest in last 5 months, coming in at a little over 14,275 rupees. Average ticket size decline rate of 12.64% month-on-month is perhaps the highest that you are seeing in last 12 months. And just to update our viewers, there is a chart that I've given up with respect to how November versus October has moved this year versus the movement that you saw last year. So top 4 players continues to lose market share. They have lost about 385 basis point of market share in spends over the last 2 months only. That is from September to about November. So market share movement YOY, the gain in spends per card has been seen for the likes of Canara Bank, South Indian Bank, Bank of India, SBI Card as well as Karur Vysya Bank. However, on the losing side, we are seeing SBM Bank of India, IDFC First Bank, StanC, that is Standard Chartered, City Union Bank, ICICI Bank and Kotak Bank to name a few. So the view is that while credit card issuance remains strong, the decline in spends is a worrisome factor. COVID-led impact needs to be seen with respect to December and Jan spends as and when the data comes. So while the inflation has come down, the caution stance that people have taken on spends is a worrisome factor. The top 4, however, continues to lose market share both in cards as well as spends. Back to you.
Okay, all right, Abhishek. Thanks very much for that. Well, let's move on then. Siemens, in fact, is in focus because they've got a letter of award from the Ministry of Railways. The company, in fact, has emerged as the lowest bidder for a 9,000 horsepower project in the state of Gujarat. Vivek is here with the details on this. Vivek.
Well, that's right. Some cheer for Siemens, given the fact that the company has emerged, as you rightly mentioned, as the lowest bidder for the 9,000 horsepower electric locomotives project for Gujarat. Now, what's actually happened here is that the company had earlier intimated this to the exchanges on December 6th. So now all that is left is to execute the project with the Ministry of Railways. Looking for some context in terms of how exactly does Siemens benefit from this particular order win. Now, remember, analysts believe that at a run rate of a little over 100 units, this particular business can contribute close to 1,000 crores as far as Siemens top line is concerned. Now, the tender involves supply of 1,200 locomotives over a period of 11 years from the existing rolling stock workshop. An estimated total value of this particular tender would be close to 28,000 crore rupees. So this involves both the manufacturing of the locomotive as well as the operational as well as maintenance services. Now, newspaper reports earlier indicated that the base price for the bid for the manufacturing of locomotives was close to 13,700 crore rupees by Siemens.
All right, okay, Vivek, thank you so much for joining us. The stock is up 2% in trade today. And with that, it's time for a break. Jay Thakkar of Marwa.
Welcome back. You're watching us here on Halftime Report. Good time to get in what the action in the F&O space is indicating at midday. It's been a good day so far. In fact, with the star of the show being the mid-cap index. Of course, on Friday, it had seen a brutal sell-off. And now, as we speak, almost 770 points for that index would imply that a 65% recovery is what we've seen at an index level for the mid-cap index from Friday's loss. And the intraday chart of the Nifty, as well as all the other indices, would indicate that, We opened mildly in the green. There was a very small dip. That dip has been bought into, and we saw this big move. And now the bulls and bears are jostling around that 18,000 for the Nifty itself. Can the Nifty sustainably cross that 18,000 mark is a question that we don't have an answer to right now. But what it has done is it has given bulls some support and some confidence to go ahead and write a lot of puts. So 17,800 put, which on Friday saw just around 15 lakh shares being added in open interest, has now added a lot more, almost 43 lakh shares added in open interest for the 17,800 put. 17,900 put too has seen a fair amount of open interest addition, almost 42 lakh shares being added out there as well. So that's telling you that, today's low of just around that 17,775 mark could be an important support to watch out for the expiry week. However, 18,000 call writers still haven't given up their hope. In fact, we've seen around 13.5 lakh shares being written on that counter as well, and it already has 1 crore shares outstanding in open interest with a premium of 100 odd rupees. So that's telling you that levels upwards of 18,050 to 18,100 may face some sort of resistance. The Nifty put call ratio saw a bounce back from levels of 0.7, now is at 0.91. So the question is, where does it go from now? The Nifty is above the 100-day moving average, the Nifty Bank above the 50-day moving average. So those levels would be important supports to watch out for as well. But that's as far as the indices are concerned. Jay Tucker now joins in with a couple of stock picks. Jay, we are seeing some recovery. What kind of stocks do you like right now?
Hi, very good afternoon to you, Mangalam. Well, yes, this is a good bounce that we are seeing. I mean, from the oversold territory, and Bank Nifty, the way 42,000 is acting as a very crucial support, and is clearly visible from the derivatives data as well. I think it's heading towards 42,500, 42,800 range. That's Bank Nifty. Hence, I have one buy recommendation from the Bank Nifty, or I would say from the banking pack. And Nifty too seems to be definitely 18,000 is a very crucial resistance as of now. So we can see some profit booking from those levels. The correct level to enter on Nifty for having a good risk reward would be 17,900, Mangalam, and 17,800 would be as a acting as a very crucial support. And if Bank Nifty is bouncing back to 42,500, 800, then Nifty can extend its rally till 18,100 to 18,200 zones. But then Nifty's buy on dips, Bank Nifty can be bought at current levels as well. The first buy recommendation is on ICICI Bank. Since I think the bounce on Bank Nifty can continue as well, so one can buy at current levels or on dips. The current market price of ICICI is at 886 on the spot levels. I'm expecting a bounce until the levels of 905 to 915. So one can buy for these two short-term targets, and one can place a stop loss below 870. So that's the first buy recommendation on ICICI Bank. And the second buy recommendation is on Apollo Tyres, which is trading around the levels of 319 on spot levels. I mean, the stock had provided a very nice breakout from a consolidation of 300 to 250 range, and it has retested that breakout levels. Hence, I would say that it's again a buy, Apollo Tyres, for a target of 340 to 355. These are his two short-term targets, and one can place a stop loss below 310.
All right, Jay, thanks a lot for joining us. With that, we'll slip into a short break. Up next, we'll connect with Shweta Jalan, Managing Partner and Head India at Advent International, as they acquire stake in Suven Pharma. Stay tuned for that conversation.
Welcome back. Well, it is turning out to be a steady day for the markets, quite contrary to what we were expecting. We have the Bank Nifty, which is in fact up over 600 odd points. But let's really talk about the deal of the day and probably the month of December itself. Private equity investor Advent is set to acquire control of Suven Pharma. The move opens up the possibility of a merger with Cohance and triggers an open offer to existing shareholders as well. I had the opportunity to catch up with Shweta Jalan, who is the managing partner and head India at PE firm Advent International, and began by asking her about the deal and how they see synergies and integration going forward. Listen in.
The way we are envisaging the combination subject to regulatory approvals and board and shareholder approval for Suven and Cohance is to build the third largest CDMO and API company in India, which has high growth, high margin and high return on capital. That's the way we've thought about the combined platform, because both the companies reflect these characteristics. The synergies we think really between the two companies will be the fact that both have large innovator clients. Suven can really access a lot of the innovator clients that Cohance has, and vice versa. Cohance has a much wider set of global innovator pharma companies as its client base. That's one. Second is, if you look at Cohance, we have invested significantly behind CapEx. We have meaningful capacity, and we can use that capacity for the Suven client base as well. The third and most importantly for the Suven shareholders, we will try to, if we get approvals, try to accomplish this merger in a way that the Suven it is EPS accretive for the Suven shareholders. And last but not the least, we certainly expect SG&A leverage as well. So between both companies, we could really create what we think is a world-class company.
Okay. Could you just specify what would the R&D synergies be?
R&D, both have very, very strong R&D operations, I would say, both at Suven and at Cohance. So in both cases, they have very strong, I would say, access to global pharma companies, innovator companies, specialty chemical companies, and across the globe, right? So there are some things I think one does better and some things the other does better, and I think we'll be able to capitalize on the strengths of both.
Okay. In FY22, the revenues of Cohance was close to around 1,300 odd crores. What exactly are the first half financials looking like, and what would the consolidated entity look like in terms of financials?
So the first half is tracking exactly the numbers that you've spoken about, which is 1,300 crores revenue, give or take about 28% margin and close to 30% ROCE for the business. So I would say the combined financials, Suven isn't public, and I don't want to speak for consolidated financials, but by and large, I would say equal size companies in terms of revenue. Suven, as we know, is 1,300 crores revenue, 44% margin, and Cohance is 1,300 crores revenue and about 28% margin, right? Consolidation often has some net pluses and minuses, so I don't want to speak of audited numbers. But if I look at broad headline numbers, this is the way the numbers for both companies are.
Okay, so you did mention 28% in terms of margins for Cohance, and Suven Pharma has always had the premium because they've enjoyed margins of over 40-odd%. What would blended margins look like? Would it be mid-30s? Are you eventually going to try to maintain it at above 40% eventually on a blended basis?
I don't want to give forward-looking statements for listed companies here at Ekta, so I don't want to speak for forward margins, but if you combined, as you would imagine, obviously this will be well above 30% margins.
Okay. What will Mr. Jasti's role be in the company going forward?
Mr. Jasti, as it stands today, would continue to run the company. And like Advent has always done in many of the companies that we, particularly where we have taken controlling positions, we continue to enhance and expand the management team, and that is something we continue to do once we take full control post the open offer is completed for Suven as well.
Okay, so is that for a limited period of time? Mr. Jasti will probably help in terms of hand-holding a new management to take over the reins, or that's not decided as yet?
I think it's early days. Mr. Jasti, as you know, would be continuing with his 10% stake in the company, so he would certainly have continued interest in the company to ensure that we can continue to grow and build the combined platform for the company.
What is the plan once the open offer is completed? Say it is entirely successful, your stake would rise to 76-odd%. What would the plan be? Would you shed stake to bring it below 75%, or would delisting be considered?
No, I don't think we are thinking about delisting at this point in time. We'll have to remain. It remains to be seen how the open offer subscription is, so I don't want to comment on that as well.
Okay, all right. So let's see how that carries forward, but no plans of delisting. So you would be a consolidated entity within the CDMO API space. Can you just give us a sense in terms of the debt on Cohance's book, and hence what would the balance sheet look like once the two companies are merged?
Even Cohance also doesn't have any meaningful leverage in its book. So, like I said, I mean, it will be a very, very healthy balance sheet on a combined basis for these companies.
Okay. Coming to the regulatory approvals on all of the facilities, one, how many facilities would you have on a consolidated basis, and what would the status of regulatory approvals such as the US FDA be, and any kind of outstanding issues that we need to be apprised of?
There are no outstanding regulatory issues in either of these companies. At this point in time, we've had no FDA issues in either of these companies. So I think all of them are regulatorily of the highest standards. I would say the same for Suven and for Cohance. From a facility standpoint, it will become far more diversified than Suven even on existing basis. If we combine these two companies, we'll have 11 manufacturing facilities.
Okay. You do have other investments within the pharmaceutical healthcare space, such as Bharat Serums. Can you just explain to us whether or not there would be any sort of synergies in the other companies that you all have investments in?
No, so the only other, so Cohance is one platform where we've combined three companies and built this large CDMO and API platform. The only other pharma investment we have in India is Bharat Serum, like you rightly pointed out. That's a totally separate entity and will remain so because that's a totally different company which is really focused on women's health and critical care or emergency medicine focused on domestic and rest of the world markets. So that is a very, very different thesis from the Suven plus Cohance platform.
Okay, you did mention your investment in Bharat Serums and now you have Suven in your portfolio as well. What is the plan with regards to investments within the pharmaceutical and healthcare space from Advent going forward?
So Ekta, we continue to remain very excited about the pharmaceutical space in India. We believe that India, both from the domestic market standpoint, as a supplier to both global markets and rest of the world markets, is in a very exciting place, just given everything that's happening in China and India really being able to play the China plus one strategy very well, right? So we've been demonstrating that, and we've been seeing continuous strong growth across whether it is CDMO players and API players, and we expect that to continue. I would say we're very excited about investing in to continue to invest in the pharma industry in India, and we'll continue to look for new opportunities as well.
Okay, you do have stake in Yes Bank as well. I know I'm digressing, but nonetheless, just wanted your thoughts in terms of how the progress is on Yes Bank and the plan with the stake.
So as you know, we just recently received the Reserve Bank of India approval and closed the transaction. Continue to remain excited as we were when we signed the investment a few months back. We do believe investing in private sector banks in India will continue to gain market share as they have in the last several years. Yes Bank is truly, we believe, at an inflection point. All the problems of the bank are well behind us, and now if you see quarter on quarter, we continue to deliver meaningful growth. You're seeing extremely good growth on the retail and SME side. It was always a new age bank, and hence the whole digital platform of that bank was very strong, right? So I would say continue to deliver on the growth that the bank has begun to show over the last few quarters.
All right, that's the word coming in from Advent International about their investment in Suven Pharma and the other investments that they've made so far as well. We'll slip into a short break. We'll get you more on markets and stock-specific action. Max, still tune into Halftime Report and look at the markets go. Nifty is at that 17,990 mark, and mid-cap index 2 is the one outperforming, and banking names too doing really well, especially the PSU banking space. So let's continue with that. 2022 for banks has brought healthy loan growth and profitability. The challenge of growing loan books in the face of rising interest rates have not become daunting as yet, and banks say they are in a pretty strong position to deal with these challenges. CNBC-TV18's Abhishek Kothari balances the books of 2022 for the Indian banking sector. Listen in.
Well, 2022 has been a phenomenal year for the banking sector. Bankers have a reason to smile as they move away from the pain of NPA cycle to healthy loan growth and profitability. So talking about profitability, profits for the sector on a quarterly basis has increased from rupees 36,854 crores in Q2 FY22 to right now about 58,717 crore as of Q2 FY23. Now, factors that have helped in improving the profitability of the banks is improvement in loan growth and reduction in stress portfolio of the banks. So loan growth for the banking sector as of Q2 FY23 was at 16.44%, perhaps one of the highest that you saw from 1st of November November 2013. The rise in loan growth helped in stronger top-line growth for the banking sector, which has helped the bottom line or the earnings of the banks. So the loan growth incrementally has been driven by the retail segment. Now corporates have started to come back for working capital loans as money market rates have shot up through the roof. So capex-based demand going ahead may augur well for healthy loan growth rate for the banking sector. Stronger loan growth has also translated into healthy operating profit growth for the banking sector. Operating profits of the sector has grown from 97,383 crore in Q2 FY22 to right now a little under 1,15,000 crore as of Q2 FY23. Stress reduction. The banking sector has seen its gross NPA ratio decline from 7.4% in Q2 FY22 to right now about 5.24% in Q2 FY23. In value-wise, the decline has been 15.2% YOY in Q2 FY23. The declining gross NPA amount-wise has largely been led by the PSU banks. Now, PSU banks' gross NPA on a value-wise has declined by 15.9% YOY, that is from Q2 FY22 to Q2 FY23, while that of private sector banks has declined by 12.7% in the same period. So, PSU banks, the gross NPA ratio has declined by 256 basis points from Q2 FY22 to Q2 FY23, while that of private sector banks has declined by 119 basis points in the same period. Banks' balance sheet has strengthened with their core provision coverage ratio increasing from 69.7% in Q2 FY22 to right now about 74.6% in Q2 FY23. PSU Bank's core provision coverage ratio has increased to 74.9% in Q2 FY23 when compared to a little under 70% in Q2 FY22, and that of private sector banks has increased to 74.4% in Q2 FY23 versus 69% that they had a year ago. So for 2023, the loan growth could remain strong and could be in double digits. Net interest margin will continue to expand till Q4 FY23 results as loans are getting repriced faster and at a healthier rate. Return ratios will expand as credit costs will come down and stress in the balance sheet will continue its downward trajectory.
All right, Abhishek, thanks a lot for that. And look at the banks go today. In fact, a big move on Union Bank, up almost 10.5%, closer to 11%. PNB too is up almost 6% Of course, these are stocks which, despite today's move, have corrected about 15 to 20% from their 52-week highs. Federal Bank as well from the broader markets doing extremely well. But a couple of these consumer discretionary names are the ones that take your breath away this afternoon. We have Trent, which is up almost 6%. Remember, last week was a brutal one for Trent, as well as a lot of these unlocked themes, so to say. So Indian Hotels is the other one which has moved to the high point of trade. Another stock which is supporting the frontline indices is the star of 2022, which is ITC, which too from the frontline end has moved to the high point of trade with a gain of almost 2%, about 7% off its highs, but with the sheer weight that it has on the index right now, it's supporting the Nifty closer to that 17,975 odd mark. Take a short break, come back on the other side. We discuss commodities. Manisha Gupta joins in with Anil Sharma, who's the COO Retail and Franchise.
Well, we've been pointing out that it's a lot about the financials today. We have the Bank Nifty, which is up around 1.4%. Just want to point out that IndusInd Bank, in fact, is ruling the roost today with a gain of around 3.5%. It's already given returns of around 33% on a year-to-date basis and is extending those gains in today's trading session. Hindalco, which is up around 3% along with Eicher Motors. So you'd have to say that it is broad-based gains at this point in time. It is not one specific sector which is leading, but nonetheless, it is the Bank Nifty separately and the financials which seem to be having a better day than most other stocks in today's trade. On the losing side, it is Divi's Labs, Cipla, Dr. Reddy's. So a lot of the pharma stocks which had seen a run last week in the second half of last week simply because of caution around COVID-19 seems to be coming off. So Divi's Labs, for example, is your top loser on the Nifty, followed by Cipla as well as Dr. Reddy's. But let's go across to Manisha Gupta. She has an interesting conversation lined up on the gifting trends towards the end of the year. Manisha.
Thank you for that, Ekta. Well, yes, the global markets are almost shut. It's holiday season, and what is doing the best right now clearly is the gifting market and, of course, cakes and bakeries. I mean, we've all been devouring that plum cakes over the weekend this time around. But let's go across to Anil Sharma. He's COO Retail and Franchise at Ferns and Petals. He joins us on the show now. Anil, hi, good to have you. And I was just reading some numbers there, and it indicates that you have seen more than 50% of growth when it comes to cakes and bakeries during the holiday season. What categories, what cities, where have you seen this growth coming from?
Hi, Manisha. Thank you for having me. Yes, cake is doing very well for us as a category, and almost around 37% of top line is getting contributed by cake as a category. And over a period, we started this journey of exclusive cake outlets since 2017, and today we are nearing around 200 stores. So our main motto was to provide better quality, better taste to our customers. We have a lineage of customers. We started online in 2002, and current set of because this seems millennials are driving the retail sector, and everything is getting celebrated by them. Even breakups are getting celebrated. So festive season, yes, in between August till March, we see the surge in the demand. And of course, birthdays, anniversaries, and different occasions, we have curated a different range for this festive season. And yes, keeping the current millennial and mid-aged people in line in mind, we have created a good product range and product mix, and which we are getting good demand also.
Okay, Anil, I haven't heard cakes during breakups being ordered for. I mean, I don't know what the celebration at that time is, but I'll take your word for it. But this is the holiday season right now, and while you said you are doing occasion cakes, holiday season cakes, the 57% growth that you mentioned is coming during what time?
So see, it's an overall period, and also there was a pent-up demand, and
Okay.
last COVID has also taught us people, the funda of getting in, keeping in touch with your loved ones. So people are going out, and our capacity is we can deliver in almost 160 destination cities, and we get gifts in less than 2 hours anywhere in the country.
All right, we'll try and patch you yet again, Anil, but I get your numbers that, yes, the numbers have been quite strong. As you said, within this quarter itself, there has been a 57% growth, as you said, in your sales there. Important to know would be on what kind of, the overall market it is and the kind of share that Ferns and Petal really holds into that, if you can hear me.
Well, I will not have the exact numbers right now with me right now, but yes, percentages we talk about, yes, 57% is the age we are growing right now.
You also are expanding into tier 2, tier 3 cities. What are the kind of numbers that you're looking forward from there?
So see, whatever expansion and market penetration had to happen, it has already happened in tier 1 and tier 2s, and now yes, tier 3 and tier 4 are going to be in focus, and people are there. A lot of cities we have opened outlets like Gaya or Darbhanga or far Kishangarh, these kind of places. So yes, we are getting good response. People are there, and because ours is a very nice omni-channel orders which we generate through our online segment gets delivered through offline, and from offline we are again able to deliver anywhere in the country. So this kind of bridge which we make between two relatives, two friends all across the country and all across the globe, it gives us good edge towards on the competition also, and we are able to deliver goods deliver smiles basically on a timely basis.
Well, absolutely. Full-fledged sinful cakes will always be in fashion there. But are you also getting into the health category, vegan cakes? I mean, you hear all those, names flying around.
So frankly, I am of the opinion, the moment you do too much of experiment, the product loses its, charm and its unique characteristic. So yes, we have tried healthy cakes, but somehow they have not done so well. There are very few takers right now, but yes, we do offer healthy cakes also.
All right.
Okay, few takers right now. Mr. Sharma, thank you very much for joining in and speaking to us and giving us a wide variety of different cakes for different occasions. The breakup cake, like Manisha pointed out.
Mind, yes.
I think the world has changed. We've become old. But nonetheless, you know, that's what's those are the trends that we're looking at this point. And for the markets as well, it seems as though there's no breakup there. It is going full tilt at this point. We have the Bank Nifty, like we've been pointing out, is up around 1.4%. A lot of these gainers, which have gained significantly on a year-to-date basis, for example, from the mid-cap index, are managing to build on. So, for example, Royal Orchid would be case in point. It's gained 180% on a year-to-date basis. It's up around 8% today. Karnataka Bank is up 130% on a year-to-date basis, and it's gained around 10% today. And similar case with FACT, the fertilizer company, is up around 102% on a year-to-date basis and managing to build on in terms of gains as well. So that's the kind of fervor, that's the kind of market that we have, that a lot of stocks which have been outperformers are now seeing more added to them. In fact, let's wrap up on the show now. And as we wrap up, we'll leave you with some market opinion from Andrew Holland of Avendus Alternate Strategies. Business Lunch will take all the action forward. Stay tuned.
Market, I think, in January, you know, still occupied and volatile in terms of, you know, we've seen over the past month, right? We've gone from kind of the Goldilocks scenario to a recession again, and the figures are still not supportive of the Fed, you know, reducing so quickly. So I think that's what's going to, you know, keep the markets the volatility of the markets kind of quite high, at least in January. And of course, for India, we have our budget coming up in February. So again, you know, there might be some, you know, kind of volatility around that in terms of what the finance minister may or may not do. The sentiment towards IT will be obviously continue to be driven by what's happening in tech in the US, and the correlations remain very high, and it's been throughout most of this year. So unless you have a very positive view on tech, and I think that can only be that you expect interest rates to fall sometime in 2023 globally for that sector to start seeing some relief, because you know it's all focused on cash flows. And for a lot of these tech companies, you know, they've been found out to the fact that, you know, valuations are high, but profitability and cash flow wasn't there. So I think that will continue to be a theme that kind of haunts the sector in the very short term. So whilst, you know, I'm not saying that our IT companies are doing very badly, but I just think the sentiment remains against them in the very short term.